Wednesday, April 15th. That date is not just circled on a calendar somewhere in Washington. It is a hard legal deadline that, if you miss it and you owe money, sets two separate penalty clocks running simultaneously inside the IRS system. And once those clocks start, they do not stop until you deal with them. For seniors who own homes, who have retirement income from multiple sources, who took distributions from their IRA this year, or who are trying to figure out whether the new $6,000 senior deduction applies to their situation, this April 15th deadline carries more weight than it has in years. Because 2026 is genuinely a different tax year, and millions of senior homeowners do not yet know exactly how different. Let me show you what I mean. Right now across the country, there are seniors sitting on a $6,000 deduction they have never seen before and have no idea how to claim. There are homeowners who took a retirement account distribution in 2025 and are not sure how it affects what they owe. There are people who received a retroactive Social Security Fairness Act payment earlier this year and are wondering whether it changes their tax picture. All of these situations have answers, clear, confirmed answers from the IRS itself. And every single one of them needs to be resolved before midnight on April 15th. So that is exactly what we are going to do right now. Walk through what senior homeowners specifically need to know before April 15th, the real deadlines, the real penalty numbers, and the real steps that protect your money. Subscribe and hit the bell so you never miss an update like this. Leave a like if it helps, and drop your questions below. Now let us get into it. Let us start with the penalty structure, because this is what makes April 15th genuinely serious and not just a suggestion. If you owe taxes and you miss the deadline without filing an extension, the IRS hits you with two penalties at the same time. The first is the failure to file penalty, 5% of your unpaid taxes for every month or partial month your return is late. That penalty is capped at 25% of what you owe. The second is the failure to pay penalty, 0.5% per month on whatever unpaid balance remains, also capped at 25%. On top of both penalties, the IRS charges daily compounding interest at the federal short-term rate, plus 3%. That interest starts the day after the deadline and does not stop until your balance is paid in full. Here is the number that catches people off guard every single year. If you file more than 60 days late, the IRS applies a minimum penalty of $525, or 100% of what you owe, whichever is smaller. That means even if you only owe $300 in taxes, filing late by more than 60 days costs you $300 in penalty on top of what you already owe. You pay double for being late. That is not a threat. That is the confirmed IRS penalty structure for 2026, and it applies to every filer, including seniors. Now here is something important that almost nobody talks about clearly enough. If you know you cannot finish your taxes by April 15th, you have a completely free legal option. File Form 4868 before midnight on April 15th, and you automatically get an extension to October 15th to submit your paperwork. No income limit, no complicated process. Every individual filer qualifies. But, and this is the part that trips up thousands of seniors every single year, the extension covers your filing deadline only. Whatever you owe is still due April 15th. If you get an extension and wait until October to pay, the IRS charges you failure to pay penalties and interest for every single month from April 15th forward. File the extension. Pay what you owe by April 15th. Then take the extra time to get your paperwork perfect. Now let us talk about what makes 2026 specifically different for senior homeowners and why this tax year requires more attention than most. The One Big Beautiful Bill Act changed multiple things about how senior taxes are calculated this year, and not all of them are being communicated clearly to the people they affect most. The biggest change for seniors is the new enhanced deduction, $6,000 per person for taxpayers who are 65 or older, or $12,000 for married couples where both spouses qualify. This deduction stacks directly on top of your existing standard deduction and on top of the additional deduction you already receive for being over 65. For a single senior filer, the math looks like this. Your 2025 standard deduction is $15,750. Add the existing additional senior deduction of $2,000. Now add the new $6,000 senior bonus. Your total protected income reaches $23,750 before you owe a single penny in federal tax. For a qualifying married couple, those numbers push above $44,000 of income shielded from federal taxation entirely. That is a genuinely significant number for anyone managing a retirement budget. The deduction phases out for single filers above $75,000 of modified adjusted gross income and disappears completely at $175,000. For joint filers, the phase-out begins at $150,000 and ends at $250,000. Even if your income falls within the phase-out range, you still receive a partial benefit. And every dollar of that partial deduction is money that stays with you instead of going to the government. For senior homeowners, specifically, there is an additional layer to consider. If you sold your home in 2025, made home improvements that affect your cost basis, or have rental income from a property, these are situations where the interaction between your homeownership-related income and deductions and the new senior bonus deduction requires careful attention. The $6,000 deduction applies to your overall taxable income picture. Getting that picture right before you file is what protects you from either overpaying or underpaying, both of which create problems. Overpaying means you are leaving your own money with the government unnecessarily. Underpaying means penalties and interest starting April 16th. There is one more confirmed deadline that senior homeowners specifically need to know about before April 15th that goes beyond the standard filing deadline. April 15th is also the due date for your first quarterly estimated tax payment for the 2026 tax year. If you have income sources that do not automatically withhold taxes, rental income from a property, self-employment income from any consulting or part-time work, significant investment income, or any other income stream without withholding, you are required to make quarterly estimated tax payments to avoid underpayment penalties. The first of those quarterly payments for 2026 is due on the same day as your 2025 return, April 15th. Missing both on the same day doubles your exposure to penalties and interest simultaneously. For senior homeowners who collect rental income, this is particularly relevant. Rental income is not subject to automatic tax withholding the way wages are. If you own a rental property and have been receiving monthly rent without making quarterly estimated tax payments, April 15th is both the deadline for your 2025 return and the deadline for your first 2026 estimated payment. Getting both right on the same day requires knowing your numbers and acting before the deadline, not after. Here's exactly what you need to do before April 15th. First, if you have not yet filed your 2025 return, prioritize it this week. If you need more time, file Form 4868 for a free extension before midnight on April 15th, but pay your estimated tax balance on the same day to avoid the failure to pay penalty. Second, confirm with your tax software or your preparer that the new $6,000 senior enhanced deduction is being applied to your return through Schedule 1A. This deduction is not automatic in all filing systems, and asking directly takes 30 seconds, but could save you over $1,000 in actual taxes, depending on your bracket. Third, if you have rental income or other unwithheld income, calculate and submit your first 2026 quarterly estimated tax payment by April 15th to avoid a separate underpayment penalty starting this quarter. If you cannot afford your full tax bill right now, that is not a reason to delay filing. File your return on time to eliminate the failure to file penalty, which is almost always larger than the failure to pay penalty. Then, contact the IRS about a payment plan. The IRS has installment agreement options available online at irs.gov that allow you to spread payments over time. Setting up a payment plan limits future penalty exposure and stops the IRS from pursuing more aggressive collection actions. Here is the complete and honest picture. The April 15th, 2026 tax deadline is confirmed and real. The penalty for missing it while owing taxes is 5% per month up to 25% for late filing, plus 0.5% per month for late payment, plus daily compounding interest. The minimum penalty for filing more than 60 days late is $525. Senior homeowners 65 and older have access to a confirmed new $6,000 enhanced deduction that must be actively claimed through Schedule 1A on Form 1040-SR. April 15th is also the due date for first quarter 2026 estimated tax payments for those with unwithheld income, including rental income. A free 6-month filing extension is available to everyone through Form 4868, but it does not extend your payment deadline. One final reminder, tax season is the busiest season for scammers targeting seniors. If anyone calls you claiming to be from the IRS about an unpaid penalty and demands immediate payment by gift card, wire transfer, or cryptocurrency, hang up. The IRS initiates contact through official mail. They do not call demanding immediate payment, and they do not threaten immediate arrest. Report suspicious calls to the IRS at 1-800-366-4484. April 15th is close. You have time to act. Use it. If this video helped you understand what you need to do before the deadline, please share it with a senior homeowner in your life who needs to hear it. Subscribe and turn on the bell notification, because tax and benefit updates move fast, and you need to hear them first. Leave a like if this helped and drop a comment below. Have you already filed your 2025 return, or are you still working on it? Are you planning to claim the new $6,000 senior deduction? Tell me in the comments. I read every single one. Thank you for watching, and I will see you in the next update.